Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Mr. Felix.
You having fun yet or no?
I don't know what's going on.
This is like things are moving all over the place. It's a little batty out there. Wow. I'm just looking at things. When it first opened up, the whole board was. It seemed like it seemed like everything was red. Everything was red. My first thought when I see something where everything is red, there's maybe one or two names that's not red, but everything is red, and I'm thinking. Money has to go somewhere. When someone sells a stock, they take the money. They could put it in cash, but you'll ask the hedge fund guys. Nobody likes to be in too much cash. You're not paid to be in cash, so they put it somewhere else. So they float it somewhere else. And if they're not floating it to somewhere else, that means the cash balances might be going up a little bit, but also could just mean leverage is coming down. And ever since Archegos, came down, these prime brokers who are basically lending hedge funds money, internally they could be dialing it down. The CEOs and the CEOs are saying, take down that leverage. We don't want another blow up. The last thing, not that they think that there's, they're obviously looking for more risk, but they just don't. The risk reward of a blow up and being in the front page in the news again, saying, "Oh, it happened again," then you're in trouble. Happens once, you got to actually appease regulators and appease the crowd. They'll get back at it in a couple of months, no doubt. They'll just start lending as much as they can. But for right now, they're probably saying, we got to bring down some of that leverage. Now you're starting to see things, things have sort of evened out, and you start seeing a couple stocks pop up here and there. Markets kind of found some footing. But we got the Fed minutes at 2:00, probably right when we're getting off. And who knows? You got to remember the Fed minutes are 30 days, basically 30, what is it? 20 days here on April 28th, 29th. That was the meeting. So April 28th, 29th, the market was around 417 to 421. And inflation, it was like peak inflation news, right? Everything was going. I'm not saying that it's still not there, but it was just peak inflation news. So maybe they felt the pressure to talk about, hey, if inflation continues, maybe we'll act. But right now it's transitory. I suspect they'll keep their bullish tone, but they might make some of that statement or one sentence is all the market takes to get a little spooked. So I'm a little worried about what might be said. They take this market all the way up. We talked about 410, 405, 400 over the next week are big levels, but 410 here, they take it here. And then all of a sudden you get a bad, one little sentence that talks about potentially raising rates. If inflation keeps going up, we're going to do what we need to do to make sure that doesn't get crazy. You could see the market just immediately drop another percent down, trades to 405. So I think the big levels for this week are 400, 405, 410. We'll see what happens. The other news, it's just staring at your face. This Bitcoin, what's going on? This is like your generation's product. I don't know what is going on.
I don't know. And then you have Elon Musk tweeting, he's got diamond hands and stuff. It's just
the guy's out of his mind. The guy. Look, when you're worth whatever is $100 billion, you can do whatever you want, right? At that point, nobody, you literally do whatever you want, buy whatever you want, say whatever you want. Nobody cares. Why is he paying attention to get us to Mars, fix Tesla? China, you see the China sales, they were way down, from what it looks like. Look, I'm not a Tesla expert as far as the details of the cars, but all we've been saying over the course of last month is there's something going on with this relationship between China and Tesla. They're friends one minute, then all of a sudden it's a month of chaos, and then they say no, everything's fine. And I don't know if somebody's not getting paid off or something, but there's something going on clearly there. And the numbers number of cars being, I guess, registered or for sale is lower. And what are you going to do there? So focus on that. Focus on getting to Mars. He's tweeting diamond hands. Like, I mean, this guy is out of his mind. But anyway, what we're seeing. There was a good article, and I showed it to you in Zero Hedge. It was just a JP Morgan, basically commenting on a JP Morgan piece. JP Morgan sees Bitcoin fair value at 35,000 amid institutional liquidations. I mean, the bulls are going to say, where'd you get 35,000? It should be, the thing was just trading 65. Like, where'd you get that number? And guess what? The bears are going to say the same thing. 35,000. Where'd you get 35,000? I mean, everybody's looking at that number, probably saying, how did you get that number? How do you, like, the thing went from $1,000 3-4 years ago to 65,000, and you just come up with some random number. It seems they've done some math here, but it's very convenient that it's exactly where it is. So should have told us it was 35,000 fair value when it was 65, and when it was, they've been back and forth. When it was 35 going up, they told us it was, fair value. It was, James Dimon saying it was negative. And then it was going towards 40, 45, 50, they tell us, it's going way up and they're getting into business. Then it's at 65 and it drops at 30, and basically they're telling us fair value is 35. I mean, it's all over the place. It's chasing a very volatile asset. So I think it's a good article. It just explains what the report was saying. But I wanted to show you these two. What I like is looking at graphs, really. This is figure 4 here on the left is cumulative flows in all Bitcoin funds and gold ETF holdings. So I think it's important to see right around, gold is the black line, and blue line is Bitcoin funds. So everything is going up, gold, gold, gold. People are thinking, when they're buying gold, they're thinking, remember this pandemic, safety. And then all of a sudden the opening is happening and Bitcoin, more money was going into Bitcoin and everything was being poured into Bitcoin. So you see gold down and Bitcoin straight up. Over here, just basically shows they sort of look at futures positioning. So our position proxies based on open interest in the CME Bitcoin and gold futures. Again, gold is black and Bitcoin futures are blue. And you could see sort of this turn really over here in the last couple of weeks. This was a little bit more pronounced here, where gold was coming off in, let's say, December. So futures there, this goes up. But over the last, let's call it since, I think I'm going to show you another chart, but gold really started picking up right in April 1st, right at the end of the first quarter. So this has been, we highlighted this. This has been perhaps a movement from Bitcoin into gold. That's what JP Morgan is saying today. It's a little bit more obvious today, but we were picking up on this since April. So let's go to sort of look at what we were looking at, because I think it's important that, actually, let me just do this. I think it's important that we just sort of see that the move, this is the first quarter, 1 month, 2 months, 3 months, and we were looking at a potential MACD diversion here right at the end of the quarter, which was perfect. It trades up on April, the first couple of days of April, and really never looked back. So this is, again, these things, the reason I think some of this stuff works, a lot of it, it's really, especially in bigger macro situations and longer time frames, the big money controls stocks, and if they decide it's going up, okay, because they're going to buy it. So here, right at the beginning of the month, when you see it so perfectly like that, that's the big money coming in. And frankly, when they come in, it takes them a little bit of time to get in. So they're probably going to be in for the next, they were in, they did this for, where did they stop? September, right here. So this was September. This was the June quarter. Up, trades off. By September quarter, they're basically out, right? And they were probably gone from here to 2 quarters, which is what JP Morgan is seeing. It's just to show you where. So this is the 3rd quarter, October, right here. This is the 4th quarter here. Okay, so I'm just highlighting this is the fourth quarter, and then this is the first quarter. So you could see how the big money is basically takes a big move and they say, okay, let's take a break. Gold's going to take a breather here. They're selling it probably out by around here, maybe a little bit more straggling along, and then there's no support for the thing, and it comes down. Here, though, we're seeing the lows. We were talking about the MACDs going lower, stock price also trending lower, but then something was happening here, right, where it went really low, the MACD. So it's a really low MACD. That by itself is telling you that maybe there's going to be a bounce. But I like going to the second derivative, which is let me see another move lower and a higher MACD. So that was the difference. And we highlighted it literally right there. And we were saying we think there's potential here for a MACD diversion. It happens to be right at the first quarter, at the end of the first quarter, which means the money. Remember, here's another little lesson. When the big money's getting in, they know they're going to take some time getting in. They know they have to actually show the world what they're doing, at the end of March. So a lot of times they wait after March 31st to start buying whatever they want to buy. Because if they start buying gold and they only get 1 million shares in and they got to get 50 million shares in, and all of a sudden it shows BlackRock is, getting back into gold. Let's assume they got completely out. Not that they did, but let's assume someone like BlackRock gets completely out of the name over here. And then all of a sudden on March 31st, on May 15th, they're going to pop up and it's like they show a buying of gold right here. Then that gives a clue that, oh my gosh, BlackRock is getting back into, they don't buy 1 million shares. They buy 50 million shares. So they're getting back in. They don't want to do that. So that's why a lot of them just wait. And they also use swaps with the banks. So the banks pop up as holders, but that's another story. And they wait for that April, and then they start buying. And this could continue for as long as this continued. This was 2, 3, 8 months. This could be, I actually think it could go right back to the highs and try to trade through those highs and test those highs. I mean, if you have inflation is one of those things that persist. So there you have gold being potentially a very big winner for the next 6 months if they get the big guys coming in for it. So that's what I'll say about gold. Bitcoin, everybody knows the story. Thing went to 65. It's a crazy asset. There are buyers. The institutions were holding the 50 level. Looks like JP Morgan is saying that they've switched from Bitcoin to gold. And I would think that it's it's something that you got to pay attention, right? Bitcoin is really the one where the big guys play. They're not playing so much in Ethereum they'll play but they're not playing so much in anything else, right? It's those two big ones, but in particular Bitcoin. And they don't like, Bitcoin dropped from 65,000 to 30,000 today. They don't like something that drops 50%. It's just they have to be moving, they have to be active. When it gets to 30, when it gets to 40, breaks 50, 40, 35, and trades 30, people are asking, what are we doing? Like, they're asking when it breaks 50, but at 30, what are you doing? Because you can't ride this down to 10. We'll look like idiots. So you just can't do that. So that's where this, once you get the institutional crowd, they will puke it just to not look like idiots if they have to. So you get the weak hands and not the diamond hands like an Elon Musk and Tesla, but you get the weak hands. And to be honest, like a lot of these institutional players are weak hands. They're not in it for 20 years. They're in it to make it to go from 10 to 100 grand. Okay, they're in it for that, but there's many of them that are not in it for that long. So, and not only that, but they might be in it too big and, literally down by 30, 40%. They started cutting a little bit down by 50. It's almost like they got to get out, right? Everybody has stops. Everybody's trying to figure out like what's happening. So, consider that. But gold to Bitcoin seems like it's the shift backwards here. And, let's just take a look at some, a couple of trades that we're seeing out there, because we're seeing things. Yesterday we talked about maybe shuffling, if you're still long June 60 calls in Newmont, maybe shuffling them out to the 75 calls and just call it a day, so you don't look, so you don't give back. Can it go back down? Sure. I think these things are about to explode, but can they go back down? Sure. But at least you could sleep at night, say I don't have a $15 option on, I just have a 250 option, and I got my money off the table and I'm happy, and let it go to 90, great. But these stocks, they're going to trade. If gold trades to the highs, these stocks are going to explode. I think that's what makes the risk reward so enticing. And I think people are now jumping in it because you see them here. They're seeing it, all right? They needed to see gold start making this move, and then they start seeing, let's see if this is, they start seeing, okay, if gold is making this move, then what does that mean for the miners? And if the miners are the vol is actually fairly low relative to some of these big tech names, and it can explode if Bitcoin goes to the new highs. This is just something that I think provides good risk reward, and I think people are seeing that now. So here's the 85 calls, and someone was buying these 4,000 times. 85, 4,000. Look at the number here that you got to be thinking, right? Got to be thinking closer to 90, 95 here on this. So now this person, it looks like it was a spread here. I saw it earlier. It was a spread, and I couldn't really find exactly where he was spreading it to, but maybe it was just a little bit of stock. So he's doing, or this person's doing what I was saying yesterday, and which is the right thing to do. If you have rode, was never good at English. Newmont, if you rode the stock from, let's call it the 60s here, and it's trading 75, let's take some off here, and then let's wait for a pullback. We'll get bigger somewhere in the 70s, 65, 70s. And while we're waiting, by the way, let's just buy the 85 calls just in case this thing becomes a monster and starts trading way up. Okay, so that's Newmont. We're seeing stuff in gold today, GOLD as well. But in this case, a little bit different. In this case, they were essentially selling a lot in this June stuff. They were selling the 25, 20, 25 and a halves. Just a lot of calls selling here, and looks like just taking profits, to be honest. We don't have to go through every single one, but I invite you to look at them and see that a lot of this stuff is, looks like my machine's a little bit, let's try this. Oh, there you go. Let's go back to the Junes just to make sure we see. Yeah, a lot of this stuff here it appears to be just taking profits. You see these calls? They were in it from the 23, 24. These are all, a lot of it was long calls, and now they're just sort of peeling off here.
What
Again,
about
taking profits? Go ahead.
What about the GLD? I've seen something.
Oh, the real gold
on the put side. Yeah,
the paper real gold. Let's see. Yes. So I saw something here earlier today. Okay, so you're seeing. There we go. What are we seeing? June
25th, 25. Yep.
June 25th. So, yes, I had to look because it's a very cheap put that they were selling on here, so it doesn't even pop up on the screen. They were doing, I did see something. What was it? The
160, 170.
It was a put spread. Yeah. 160, 170 put spread 25,000 times. They paid around, what was it, $1? I had it in my notes here.
They sold it at 30 cents about.
Yeah. So, gotcha. Yeah. So there it is. 80. I have it here. 88 cents. 88 cents. So 88 cents for the 170, 160. Look, I saw this and I think, why are they buying this put spread? Like, what's the thinking here? I think it's actually just pretty good risk reward, where you're as a hedge, right? If gold, gold's done this for 8 months. If this is the move and it goes straight up, we're long. Let's just buy the ones that, look what they did here. You have this. Let's get a little bit. Let's make this a little bit longer so we get more context. And more of the story here. So let's do 3 years. Okay. So remember, this stock has done this huge move. Okay. So we got this huge move coming from basically coronavirus is here. Right. And then literally we've been watching this thing. I've been watching this thing, trying to look for the next move. From this 194ish 95 high, and it's been this pattern here, right? It's sort of this, I'm not going to be perfect, but it's something like that, right? You see that? pretty easy to see. It's
Yep.
nothing scientific here. And when we got here, we see what we saw in the MACD diversion, which is right around where 157.5. So there was decent volume here, right? Going to the 162 as this thing's dropped. People getting out, but people getting out, people also getting in, likely. And what they want to protect here is 170 to 160 for $1.80, 88 cents. So they're probably long, right? If you were long thinking this is going to go from 176, possibly, I think it can actually recapture the highs. Maybe it takes a couple of months. We'll know where we are. If it starts coming back and getting into this channel, yeah, maybe it can go to 160. So, right, this channel has been here for a while, comes back through 171. They're playing a move back down like this real quick because it should keep on holding this sort of new burst out of this channel. That's what would make it real. We had a little bit of, volume here. I think I'd really like to see a day when the volume is, somewhere up here, which is what, 17. You want to see the volume spike and be above this line to really think. And that's when I'll say, like, this thing's going to explode. Right now, it looks like it's going to explode, but I think people are saying if it doesn't and it just creeps back in this area, it could just start it to do this. Okay. So for 85 cents, 85 cents, I'll do that to protect my long because I think this is about to explode.
Cool.
All right. And that's a big player, right? If he's not doing it because he's negative, I don't think he's negative. I think he's doing it because he's trying to get really big in the name. And he's trying to say, all right, I'm going to buy 25,000, 2.5 million shares of $170 stock. That's how much? 340 and 85. So it's 4.25. So $425 million of protection.
Not bad.
Right? 25 million, 2.5 million. Yeah, that's what it is. So that's a lot. You know what I mean? So he's very, very long gold here. It appears to me. That's what I would think. I'm very, very long gold, and I'll buy this 88 cents put spread that's going to protect me to the areas where I think it's going to stay and it's going to hold. Remember, let's look at 157 here is big, right? Coronavirus, support, all this over here rides up, and then we got these two levels here. Okay.
Cool.
Good. I liked it. I liked the trade. I liked it. If somebody's really long, that's a great hedge because it's leaning on the technicals. And remember, the 50 days right there. I'm sorry, the 200 days 173.5, and the 50 days moving up. Like, it's just, if it breaks down, it probably breaks down for whatever news, and you get it down to this level again, and then it's no good until it retouches these type of things and starts doing work. But I like it. That's actually a great hedge for one of these big institutions.
Cool. Well, now, since the theme is gold versus Bitcoin, and we've been looking at gold stocks, why don't we take a look at coin also? There was some UA in there.
Coin stocks. Kathy Woods' new favorite stock. Let's see. I always tell myself, don't beat her up today, Then I get stuck looking at one of these names. Like, this is, it just came IPO, so we should get a little bit.
Yeah,
It's, techno analysis is not really going to work in it here. Maybe just look at a couple levels. I mean, the thing's only been out for a few weeks here. It's 5 weeks. So, tech analysis is not going to work too much. You can look at where it opened, right around here, and sort of how it dropped here. It looks like it's just been trending down. This seems to be some sort of level developing. I would say, just looking at it, developing here, right? So you have it, just look, right? You have, I'm off maybe by $5. It's $300 name, but you have it here, something going on here and here, and then you had it here on day one. So you also had it here. So it's sort of like this 310, 305 range. Again, I don't think you need to be perfect here, but 305, 310, something going on here. So what are they doing?
Looks like they're looking at a call spread.
Coin. June?
Yes. Makes
sense. 250, 280. So 250. So they came in today at 250. Okay, so definitely the spreads. Vols up in this one. So Vols up a decent amount. So that's our biggest clue that they're buying these. So I'll just go with that. It makes sense. Who wants to own this stock when it goes down every day, and you can just buy these calls and not think about it. So what are they paying here? So the 250 calls are about $10, and 250 calls are about $10, and they sold these at around 475. Is that right? Okay, so let's call it $5. Just to make the math simple. $5. 250, 280, that's 30 points. They pay $5. Did they do a ratio here? I just wanted to see a little bit more than maybe. Let's just say it was 1-to-1. But it looked like they might have sold a little bit more here. But $5, so 250, 280, that's $30. And $30 for the 250, 280. That's the max it can be, $30. No matter where Coinbase goes to the upside. 250, 280. If you do it 1-to-1, it can be worth $30. And they're paying $5. So 5 to make 25. So that would be a 5-to-1 play on whether or not it can get back to here, 280. So 250 goes right in line with sort of here, the bottom here, 250, 280 goes in line with where it went right here. So, technically they're picking sort of spots where there was closing, openings and closings. Those are big levels where there was supply and demand. Although again, technical analysis over 3-4 days is like, it's not, you should make a career out of that, but we have nothing else to look at here as far as the thing. But I would say 305, 310, 250, 280, for $5 on a 5-to-1 play. How does it go up? It goes up. What if Bitcoin goes from 35 back to 50, which it very well could in a week, 2 weeks, because 50 was that big level, collapses, everybody sells, then it kind of comes back. Maybe 50 is the level, comes back to 50. Where does Coinbase trade? Probably starts moving back up. I mean, look at where it was over here, which is 280 only a week ago. So that seems to be a pretty interesting trade. Like I look at that and I say, I think it's pretty good. There's nothing wrong with that one, right? You basically, Coinbase is going to move to some extent with Bitcoin, and Bitcoin can shoot up to 50 now. Where's it now? I mean, somebody tell me where the thing is now. When I saw it before, it was 30,000, and then I looked. It was a couple of minutes later, and they're talking about how it's like come back to like 33, 34,000. So this thing is moving around.
40 and a half actually right now.
No, is it?
Yeah.
There you go. So, it's to me, it looks like an interesting trade. 250, 280. The stock is so under pressure. So many people have been selling, bought it on the IPO, selling. I think it looks like a good trade. I really do. 5-to-1 on a June 4-week trade in Coinbase that just was trading 300 a week ago. We're not talking about valuation here. We're not talking about valuation. Who knows about valuation? In 5 days, nobody knows. It's just going to be sentiment. Does Bitcoin sentiment come back over the next couple of weeks? If it does, Coinbase trades at least 250. You get a double. 5 is worth 10. Maybe you take half off, and then you just ride the rest. That's how it's going to look. So, all right, good. So that's cool. Coinbase and.
Let me actually show you something. We just talked about FUBO yesterday, looking at some calls, this and that. And then today I see this.
Facebook wants its pay-per-view model to expand across sports. Yes. I saw that same thing. And I like it. It's you want it to did you read it?
Yeah, a little bit. Yeah.
A little bit. So, it's interesting. I mean, they're basically you're going to pay to watch sports. Okay. So they're opening up this thing, but the whole FUBO argument was that, a lot of it's like soccer and they're getting these licenses. But what if Facebook, I don't know how much it would cost to buy a tournament, one of the big tournaments. I have no idea. Say it cost $300 million to buy the access to the tournament twice a year. Maybe it's once a year. I have no idea. But maybe it costs $300 million. Facebook, just to get this on board and get people sort of comfortable with paying. What if they charge $5 for the tournament? Can they get 50 million people? People are telling me that there's 500 million people that watch these tournaments. So you can't get 50 million people to get access to, everything at $5. So maybe, maybe that's the better platform instead of paying $60 a month, because you might not get $60 a month from the rest of the world. They have $5 one time a year. They don't have $60 12 times a year. That's been my argument, to be a little careful with the stock. The stock has been trading okay though, so I'm not as I'm respecting the fact that it's making a decent move higher here from the lows. The Facebook, when I read this, the first thing I thought was, that makes sense. It's keep it simple and stupid. Not that I like Facebook, although I do, but not that I like it. It's just they have billions of users, and you talk about the billions of users that watch football. There they are. You want to charge them $2? If you can get $2 it's $2 billion. You can buy every football game on the planet. You know what I mean? And show it to them. So yeah, if there's 500 minutes, just focus on football. Make a little football product. You think Facebook couldn't do that? Why not?
Right.
Why not? And give them access to football games across the board. And I don't know. To me, that made sense. Like when I thought of that, I go, now that's actually a good idea. Building something around the sports and trying to beat everybody else, it's really a tough game. You're trying to beat guys like Facebook. They make one announcement and blow up your whole soccer part of it. It's tough. I'm not sure. We don't know what the pricing is already. We don't know what the pricing is. We don't know how they're going to do it. But I suspect, like an Amazon, or YouTube, they don't care if they make or lose, or they break even. They really don't care if they break even. Break even to Facebook is a plus. Yes. Because of advertising and the amount of time you're on their system. It's a plus. Break even's a plus. So they'll break even for a long time. And that could put you out of business. Whatever business they're in or they're getting into can put you right out of business. So it's going to squeeze margin. It's going to be tougher. Not saying that I'm not being negative on FUBO. I'm just simply saying he's a big guy, and he's saying, all right, we'll do pay-per-view TV on sports. Once you get comfortable paying $2 to watch games or watch a game, I got into the UFC. I bought one event, and then the next thing you know, I was buying it every month, and then they're literally putting stuff out every week, and my head was spinning. I think I spent end of the year, I think I spent $1,500 on watching UFC events, and I'm thinking, what a racket! This is great. And sometimes the match was only 30 seconds, and I'm thinking, this is too much money to what So it's just interesting. It's interesting, how Facebook makes one announcement and everybody's got to rethink sort of the bullish arguments. Remember, bullish arguments, when you think about them and you get these bullish arguments, you got to think about them over the next 30 years, right? 20 years, 10 years, long term, because that's what these companies want you to think. We're going to build this out. You make one announcement, Facebook makes one announcement, and all of a sudden that 10, 20-year vision, you got to maybe change it a little bit. And it's a little scary for investors to think, But, I think that's what makes these high risk, high return types of trades.
Right.
So you want to be a little bit lower than, it's different buying FUBO than buying Facebook, let's say. Okay. So that's that. But Facebook, I actually did see something that I wanted to show you today, because I still think this is really interesting. When I see someone come in and, what were they buying? They were buying June. No, they buying September. So someone comes in and they buy these. Okay. Now I looked at it and I wanted to make sure if they bought them, and it was a little tricky. Is, when you looked at it, they were on the bid here, but when I went to the time sequence and I wanted to see, let me put myself into the driver's seat and just look to see where was I buying these. At 11:31, I came in, I bought around 1,500, paying around 1989. It says the bid here, but I gray this out because it's sort of it's the area where it can be confusing and can cause you to, it can cause you to see it, to get the wrong answer. Okay, let's just say that. And so what I do here is I want to see it in motion. At 11:31, I pay 1989. I buy 1,500. Okay, at 11:32, I buy a little bit more. I'm paying higher, 1995. At 11:33, I'm even paying higher, $20 on the balance here, and sort of that's what gets me up to about 2,000. Keeps on going. I'm keep bidding it. It drops a little bit, but I then buy it higher. So as time went on, it seemed like if it dropped, I was starting to pay up. So I look at that and I want to say, okay, let's see what was happening over here on this side. So on the IV, I see 33.7. That was a little bit higher. 33.7 was a little bit higher than it was yesterday. So yesterday we walked in and it was about, this morning we walked in, yesterday's class was 32 and a half, call it 33. So volatility was up here. Volatility was up to 33.7, 33.9, and 34.1. So as I was paying higher for calls, 89, 95, 20, the stock was actually going down. 310.45, 310.26, 310.04. So the implied volatility had to go up. Okay, that means that's telling me there's a buyer there, not a seller. But if you looked at this and you saw a bid, you would say, oh, there's a seller. So this to me is a buyer. Okay, that came in at 1131.32. And again, it's because I'm paying up in price when the stock price in calls, I'm paying up in the calls, and the stock price is actually going down. So the implied volatility you see here is going up. And that was the bulk of the trade. So when I look at that, I say, okay, so now I'm a buyer. Does that make sense? I'm a buyer. Where does the buyer think it has to go? Okay, 370. So that means that puts me somewhere about, let's call it 380-ish. Okay, 380, right? So I got to be thinking around the 380. This is a risk reward break even price. So to pay 20, I got to be thinking a little bit higher, 380. 380. That makes sense. Why does it make sense? Because over the last 2 months, we've been following the prints, right? We've been following Facebook prints all the way up. We started where? At 255-ish. So in Facebook, we started at 255. We've walked it all the way up until, just going to push this. We started all the way here at 255, and we walked it all the way up. We were talking about 330, 340-ish. It landed at 330, 332, and then came straight down. The first mark, when we were first looking at it, they were buying the 280s, 285s, and we were talking about 310. And then they came in and rolled it, and they were buying the 300s, right? And if they're buying the 300s, they got to be thinking 330, 340 is what we were saying. And then here, as it went down here, they rolled out of July into September, and they're buying the September 350 calls. So if they were buying the September 350 calls with the stock over here, we were saying that when they were buying it, when we saw that roll, I think it was about a week and a half ago, we were saying that they had to be thinking around 380, 380, maybe even 390. And today, same thing. Guy comes in and he buys 3,000, almost 4,000 at $20. That's not chump change. That's $8 million in calls. Okay. So he's getting bigger down here at 320, which now we're saying 380 again. Where do you think it's going? Where do you think these guys think it's going? They're not paying $20 for 320 calls because they think it's going to 335. Right. They think Facebook is going towards 400. Okay. In that direction, 400. And the question is, can it get to 400? Well, this thing has been flying here. We've seen this. Let's just call it 300, 245. So 245, right around 300, 305. Make it easy. $50, $340, $60, 345, 305 is $60. Let's call it somewhere around there, $55, $60. And if you threw that up above, it would be 300, 350, 355, 360. So that's just if it follows this flag. But remember, this is not a momentum name. This is attracting momentum buyers here. It had value investors here. Value investors aren't buying for a 40% move. They're buying it for the long term that they think there's super value. Now, one thing I would think that the value investors are looking at is, I didn't know this. I think Google, I don't want to get the numbers wrong, but I think Google has, like, if you think about advertising, the advertisement business, Google has, let's call it, I want to say 20, I think it was like 27%, probably wrong, but 27, 30% of the ad business. And then I thought, oh, wow, that's huge. And Google's the number one player and they're huge. And then I thought, because I looked and I saw Facebook has like 23, 34. I would have never thought Facebook and Google were that close together. Okay, as far as advertising. And when I saw that, I thought, wow. And then you look at the market caps of each, and what's the market cap of, let's see what the market cap of Facebook is. want to guess? I think it's, I want to say maybe 800.
Yep.
885 billion. And then Google is 1.5 trillion. So double the market cap. And they're pretty close on the advertising section. Now, Facebook has problems with the privacies and potential legal action, but so does Google with the antitrust. But, I just think that there's something there. And I think that's what's drawing the value guys saying, look, if everything's going, if streaming is where we're going and advertising is being pushed out of, basically billboards, they'll still be there, but a lot less, Madison Avenue, onto online. It's a big budget. These guys are the winners. Google's at X%, Facebook's at Y%, and Google's double the valuation. Let's take a look at Facebook. Let's take a look at Y. So that's interesting. So look, they keep on buying Facebook calls, and they've come closer and strike the 320s here, spending $8 million on calls into September. They think it's going to be a good summer for Facebook. Where if Facebook, now I want you to think, just to get you to sort of, put things in perspective. If Facebook is 400, say 390, how does it get there without the SPY being up towards 440, 450? That's what I'm looking at. That's what I'm trying to, say, yeah, I mean, as much as I want to say there's a lot of problems, how does Facebook get to here with the market tanking? It doesn't seem like that's possible.
Right.
Okay. So some people are very, very bullish on some of these bigger names. Let's see how it plays out. But I think you need a good market too for Facebook to get up 20, 30%. So I'd watch the next earnings in Facebook. I think that's going to be an important one.
Okay, nice.
Okay.
You remember those Tesla ones we did? We talked about 1x2s and puts. Could we actually revisit those and take a look how those did?
Yes. Tesla, 1x2s. So Tesla, tricky little bastard, this thing. Let's see, Tesla. We had the 640s, write this down, 640s, June 640s, puts, buy one of those and sell the 550 puts twice. And we bought it at around $7, right?
Yep.
We bought it right before earnings when the stock was about, I think it was like 720 or something like that, somewhere around here. But I think it's somewhere in that there. We bought the 640. Because we're going to follow. We should actually follow this. We're going to follow this to the end. We've done it a few times to give updates, but we bought the 640 and we were selling the 550. Yeah, this is 550. Okay.
Yep.
So we bought this one, six, and part of the reason again was, to show you sort of how to play these things on your own. Part of the reason why it was the 650s is we wanted to be sort of underneath the 50-day and sort of underneath this trend that we were starting to see over here, right? The stock was trading probably right around here, okay? Mm-hmm. And because if it breaks this, that's sort of the signal that moves down, and you're there. Remember, I've done a couple of presentations. It's like Wayne Gretzky. You want to be where you don't want to chase the puck. You don't want to chase the stocks. You want to try to figure out how the stock is going to cross whatever strike you're going to pick. So once it breaks the 50-day, breaks this sort of trend, that's when it's going to gain some speed. That's why we picked the 650s. Now, we wanted to sell the 550s because why? Because there's been buyers here at the 550s, right? Big levels here. Mm-hmm. This is where it all moves. So that's what we're doing, 650, 550. Now, 550 also, when it gets there, becomes a little bit of a curse to you because 550 also becomes a very big level. And if it breaks that, you could see what we call a shift down here to 400 to, let's call it, what's that, 450. So you can see it. You could see a very quick move down here if it breaks 550. Okay, so we're looking at that now. Now, where's these? Where's the pricing? Let's look at Tesla pricing on the June. We did the June. What did we do? June 18th. And regular June. And we did the 550s are, let's call it 31 and a half. And 640s are 87.75. Let's call it 88 and 31 and a half. 31 and a half times 2 is how much? 63. Mm-hmm. Right? 63 and take that away from 87 and a half, 88, 63 from 88 is 25. So $25. So this thing is now worth $25 and we paid $7 for it. Okay.
Nice.
So that's good. That's a good thing, right? Now, the question is, or at least you should be thinking about, what you should be thinking is that, the puts, the 640 puts are $88, not $88, they're 38 and 40, $78 in the money, right? $78 in the money. So this thing is $78 in the money, but it's only worth $25 because the 550 puts are now the at the money option, essentially close to it. And so they're very high relative to sort of the out of the money and the out of money puts and the out of money calls. So now what will happen, and we'll watch this. This is going to be a good exercise over the next 4 weeks. We're going to come back and take a look to see how this is sort of how the trade is either growing or how up or down from here. You will see that $25 will start expanding as long as it's trading within 5.25 and 5.75. If it trades like that up and down over the course of the next 2.5 weeks, 3 weeks, this thing is going to expand from 25. You'll see it expand to 40. Even though if we end up at 562 in 3 weeks from now, it's going to be about $40. Okay. Right. Getting closer to the max. The max it could be is 640 minus 550. So that's 90. That's the max. Okay. In 3 weeks time, if it's around 560, you're going to see this closer to $35-$45.
Right.
Okay. Because it's going to start growing and start trying to become the $90 or get close to that $90 if it's right here. So we know, what do we know today? We know that if it landed right here on June 18th, if Tesla lands at lands at 562 on June 18th, we know that 1x2 put spread is going to be worth how much? It's going to be worth $88, call it. Okay, 562, 640 less 552. Wow. Sorry, I keep saying 88, $78. We know it's going to be worth $78. Okay, but it's not June 18th today. Today it's only May, whatever it is, May 20, whatever it is, 19th. May 19th. Yeah. So today's May 18th. So we still got some time, but 78 right now, $25. If Tesla does nothing for the next 4 weeks, just stays right at 562, you'll see $25 start growing into $78.
Nice.
Capiche?
Yeah.
Yeah. You see it? So you got to visualize that. It's going to grow into $78 if it does nothing. But of course, Tesla is going to do something. If it ramps and goes right back to 640, 650, what's going to happen? $25 probably doesn't move that much lower, but it'll probably go closer to like 17, 18, depending on the timing. But we're going to watch it so that you get comfortable and you see how this strategy that I laid out works, the 1x2s. Now, if I was doing this at $7, I know that it's very hard. That the last, $78, okay, that's what it could be worth here right now. Or let's take 640 puts minus the 550 puts is $90. That's the max it could be worth. But I tell people that's a mirage, okay? Because what happens is as it's moving around, it never can get to that $90 until 4 o'clock on June 18th.
Right.
Okay. And so up until 4 o'clock on June 18th, it's going to be less than 90. And what happens is you can never really capture. It's very difficult to capture that last bit until the last day. And the last bit could be the last $25, right? So you're talking about Tesla. So what do we say? 90 minus, let's call it $25 is about $65. $65 is what I'd be aiming. Is like should be really happy at $65, almost 10 times your money. But $65, you should be happy. Even here at 25, you would take a little bit off because again, if Tesla goes down sharply, $25 is going to turn into a negative number because you're short the extra one down there, 550. And you're going to start getting long at 450, but you paid 7. You're going to get long at 457. I'm sorry. 90, not you get long at 90 minus 550 minus 90. So you get long at 460, right? So you get long at 460 and you paid 7. So really you're long at 467. Okay. So that's the risk. If it starts trading down sharply, 25 could actually disappear and it could turn negative. You can get basically long Tesla.
Right.
Okay. So we'll watch it, but I when you're doing these 1x2s, I always tell people you make 100% on this, you got to take a little bit off. I don't mind letting the last couple of pieces ride, but it gets very volatile towards expiration where it's really just stock, and I've done these over 25 years. The stocks tend to move so much near expiration week, and the reason is because people have these trades on, and they're trying to get out of them, and so they can work in your favor, work against you, and it becomes very volatile. So you spend 7 to make 25 and 30 and 40, you got to be taking some off,
right?
And then leave a little bit to try to pin the tail on the donkey and make $90.
Cool, nice, I love it.
All right,
awesome.
Yeah, we'll keep looking at that one. That one's actually a good one to look at.
Mm-hmm.
Good. Let's talk about what else did I have here today? I wanted to see some UOA in other areas. Let's look at Macy's.
Sure. Yep.
Did you see this in Macy's today? So Macy's, good numbers in Macy's. They're excited again. We've been seeing call buying in Macy's for a while here. Stock's down here a little bit, so they took a little bit out, but it's up from the lows today. So stock came off and then traded higher. Implied volatility jumped here and it came down, but after the earnings, of course, you're gonna get stocks vols coming in, but here 10,165 in one shot, trading at the highest vol of the day. That was a buy, and again we have been seeing Macy's buyers for quite some time here. So let's take a look at the chart, because I wanted to show you something. I thought it was interesting and something for you to watch. Okay, I think this will be an important next 6 weeks if you wanted to just watch something to learn what we're trying to say here and what relative strength looks like. So we have a stock that obviously is doing this. Let's call it that, and then let's just do this for right now. See this, not touch it, and okay, not rocket science, right? You just connect the dots here. This is what it looks like to me. Stock's trading up. What I want to point out is how this right here, this was a big rejection. We've talked about this every time we talk about Macy's. This was a huge rejection, right? Then the stock said, we're going to buy it here, and powers that be took it, and they took it back up to 21. Again, a pretty sharp rejection. Again, just see it. Just look at it. This is a rejection. It goes to 22, and they literally in 5 days smack it down to 13.5. Major rejection. Okay. Then it trades 21, and they do it again in 7 days. They smack it down to 14.5. Major rejection. Now they try to do it again right around 19.5. Okay. Went a little bit above this trend, came down. Now we want to see what happens. If it can hold, then this pattern of rejection, 1, 2, that would be a bullish sign. That could sort of get it out of this range and maybe start taking it up towards the, at that point you're looking closer to probably 27 to $30. But this is what I think we're going to be looking at, and I'm curious to see how this plays out. C18 here seems to be a little bit of a level in the last few weeks. Congestion around here. It's been trading tight. 17 to 18, decent amount of volume here. There was again, this is a sharp move down. Let's see what happens here and see if we can see the same rejection. Comes back down to 16. We're back to square one, right? They don't like it. They didn't like it at 22. They don't like it at 21. And they don't like it here again at 19.5. Okay, so it's telling you that the market's pretty clear. We don't like it. We're better sellers here, and we are better buyers over here, right? You see how this is going up? So it's going into this, you could call it a volatility squeeze, or you can call it a flag. But once it breaks out, either way, up or down, you're going to get another sharp move up. And if it breaks here, you can get a sharp move back down to, let's call it even $10. Why not? I would really say more 12-ish first, because here was the volume. So 12-ish to right around here. Let's call it 12 first stop. Second stop, maybe 10.25 or something like that. Okay?
Nice.
So that's Macy's. Again, watch this. This will be a good, I want you to watch this one. This would be a good lesson for you, just to, pattern recognition. 1, 2, does it do it again? And if it doesn't, they're ready, right? The seller's got to be here. Where's the seller? He's selling. He is there, right? He sold it here, sold it here. He's still there. Okay, let's see how much, this was the action. They took it down. Can he do it again? If he can't, then this thing's got more legs and it's going to shoot up. The buyers win. Okay.
Yeah. Nice.
Good.
Nice.
How about the other one I saw? And then if you have any VIPs, VIPS,
yes,
VIP shop, VIPS. Ugly chart, right? I think this is Archegos. It just looks like Archegos all over.
Yeah, Chinese name.
Chinese Archegos. And let's just frame it out first. We're looking at obviously there. I would say, argue there's something right around here. Right around 26, even 27, right? That little range right there. There's something there. I would say there's something going on over here, 34, right? You had this move here. This is just a break, but you have this stopping resistance. And then I would say something going on right here, maybe. It's a little, maybe not, but 24-ish. And then maybe this gap right here. Okay, so we're looking something at like 20. Okay, so these are sort of some levels that I would be interested, that I think are interesting. Okay.
Yeah.
Going back to August. Yeah, I mean, look, this was the gap. They like to fill gaps. They kind of, they did here. It was gapping way down, got down, but there was a gap here open, and you can even extend this to over here and see stuff going on. But I would say 20, sort of 20, 24, 27, 34, and it's going to take time to move up, but something like that. Now, this break here, see this 200, this is the 200 day. Again, once it breaks like this, usually it tries to move back. It usually tries to kind of, we've been talking about DraftKings stuff. It usually tries to come back, unless, if not, I mean, it's just for sale and it's game over. But these things go through. This is a special case because there was so much. It just crashed because of Archegos. But I would expect somebody's eyeing the 26.25 level like the DraftKings. So that's what I would expect. What do we got here? VIPs.
June's. Yep.
So here, someone had open interest of 7,000. So they look like they're closing here. So they sold it on the bid here, 22.85, 65. Vol came off a little bit, should have returning. So looks like the stock came down. They sold their puts and same spread. Yeah, same spread here. Same spread. And it looks like what happened here? 9.55. This traded on the offer. On the offer. Yeah. Okay, so it looks like it traded on the offer. So it looks like they sold. Looks like they sold these to close.
Okay.
So let's look at VIPs again. So they were long these puts, looking for this type of move lower. Be interesting to know when they bought them and how much they paid, because they were. I don't know when they bought them, but if they bought them back here, like wow, they were buying the 20 puts when the stock was 33. Like it's a Chinese name, so you get a little bit of insight into what's going on. But that's impressive. Even though I think they bought the wrong one, so sometimes you're too smart for your own good. Even if you pay 20, like if you knew the stock, we got to see where they bought them. I'll figure that out tonight. But if you bought those puts when the stock was 30, you bought the 20 puts, and you're right for 30%, and the puts you paid like 35, 40 cents, and now you're selling them at, what do you sell them? You're selling them at, let's call it 70 cents, right? Sold them 50, 65, 80s, let's call it 65 cents. That's not a great trade. You pay, we got to figure out what he paid, but if he paid 30, 40 cents, which I imagine 7,000 options, probably what he paid, it didn't matter where it was, but let's call it 30, 40 cents, and you make only 30 cents. I mean, and you quote a move like that, there was probably a better option to buy. So I just think that someone had good insight into what was going to happen here, and I think they chose the wrong strike. But they're selling these, which would make sense because at this point the stock's dropped for this much, and we probably have a line here, stretching a little bit, but we have something here, sort of like what's going on here. I'm stretching it maybe 20, but maybe it's 2018. At some point, this thing is, you can use Fibonacci retracement too, by the way. Let's just see what that says. Because I want to. So the retracement level is 27 and geez, 100% is 15. Okay. So yeah, look, I would say somebody is not as confident that it's going to keep going lower. So they were long the puts, thinking that the stock was going to going down. They actually made money. They're selling that now. And now it looks like they're buying these 27 calls. This was not spreads, and it traded at different times here as the stock came off. So the stock came off. They did this in the morning, whoever did that in the morning. And then maybe as the stock came off, they came back into market to buy some calls here. So now they're switching gears and maybe buying these 24 calls for a buck. Let's call it a buck and change. So yeah, it makes sense. Somebody's playing buck and change for the 24s would get you back to around 27, 28, which is right around this 200 day. Again, they're magnets. So if he came in and bought them at a buck and a little bit higher now, yeah, he's thinking 26, 27, 2, 3 to 1, 2 to 1. It's about right. Okay.
Cool.
What else you seen? Anything else? Questions? I think that's it. One more?
One more, sure. Pick which one you like, FCX, G, or AMD?
AMD. Let's see.
Okay.
AMD is interesting today. I was watching it. AMD. So I don't even know what traded today, but I want to show you something. Let's just look at, let's look at this first. We're talking more and more about, we've been getting a lot of positive feedback. People like to sort of thinking a little bit shorter term, seeing what they can play and play around with. Yep. So we've been showing a little bit more of that and how to think about things, how to think for yourself. Obviously, 74s, I mean, Ray Charles could see this, you know what I mean? 74 here, and here. And I mean, it's pretty obvious. 74 is the level. They're either going to protect it or they're not. What's going to get it through the level? I have no idea. Today, in the last week, last call a week and a half, it's gotten through this level 3 times. And each time within 24 hours, they've pulled it back. Okay, so 74 is a big level. And I would say that if I did 30-minute chart just to look to see what happened today, I was watching it. The market, it's on my radar below 74. So 74, I'm watching. And the minute it goes through 74, what happens? It just takes off, right? It just takes off. And so, yeah, you can play the short game here, and that's totally fine. You're playing a collapse. But at the minute it gets through 74, you just got to cover that short and literally turn it around, right? Because 74 is going to be this level. I suspect 74 will come into play. It's got to hold for the next earnings, right? If the world is not coming back from this supply stuff and there's no, future over the next, call it no 6-month future recovery on the chip supply, people are already saying 2022. Well into 2022 is really the big negative. You're talking about almost close to 2023 where we're dealing with chip supplies. That could be a problem. And eventually people just say, I'll come back to the chips when it's actually cleared up and we're actually going to be selling stuff. So I think 74 comes to play in the next earnings somehow, some way. People are protecting against it, but 74 just, what did you say? Is there something going on here today?
No, it's Ray Charles was funny.
Ray Charles. Jamie Foxx is good. It was a good move. Let's see here. AMD. What are we seeing? Probably just call it by I would say 74 is the magic number. So I do see a lot. Wow, there's a lot of stuff going on here. May 21, May
probably
77.
more day trading, right? I mean,
yeah, a lot of day trading there, but let's see the Junes. 75, 80. Yeah, I don't know, but 74 is going to wake everybody up. 74 is the magic number. It's going to wake everybody up. I have to dissect this a little bit more. It looks like this one just doesn't look like anything. It looks like a funding trade. See here and here. Somebody just closing down the position of funding trade.
Yep.
And maybe August for earnings. What are they doing there? August, not too much. All right, I'll look into AMD tonight, but 74 is the magic number there. That one is it's very, very clear. Ray Charles could say it. There you go. All right.
Cool.
All right, good. That's it, man. I gotta go.
Thank you, Felix. Thanks, everybody. We'll see you tomorrow. All right.
Goodbye. Bye.